Thank you for joining us for another edition of the Optimized Weekly Market Recap. I'm Matthew McGraw, and today we'll be reviewing the key highlights from last week and what we're focusing on moving forward. Last week, markets experienced a slight pullback, with the Dow Jones, S&P, and NASDAQ declining around 2%. Despite these declines that arise due to normal market fluctuations, key sectors remain resilient, and steady economic data continues to provide a solid foundation as we explore this week's top company, top sector, and top asset class. Let's start with Chevron, which posted strong third-quarter earnings of $4.5 billion and returned a record of $7.7 billion to shareholders. Its focus on higher-margin oil production and expanding capacity continues to drive financial strength and long-term growth. Turning to our top sector, energy led performance last week, driven by rising oil prices following new U.S. sanctions on Russia. The gains were further supported by expectations of regulatory easing under President-elect Trump, with policies focused on boosting domestic energy production and lowering costs. Finally, U.S. equities remain by far our top asset class, driven by market stability, strong consumer spending, and leadership in key sectors like technology and financials. Starting with our weekly insights, the U.S. Treasury yields have stabilized after reaching their highest levels since November 2023, following Friday's strong jobs report. This moderation provides reassurance for bond investors and supports a much more stable outlook for fixed income markets. We of course wanted to touch on the S&P 500's impressive historical trend, where after 2 consecutive years of over 20% gains, the index has averaged a 20% return in the third year, with every instance delivering positive performance. As we head into 2025, this track record reinforces optimism for continued market strength. Lastly, the U.S. money supply to nominal GDP ratio has returned to its long-term trend, highlighting a healthier balance between liquidity and economic output. This stability reflects the resilience of the U.S. economy, supporting steady growth while keeping inflationary pressures in check. On Tuesday, the U.S. Producer Price Index for December will reveal key inflation trends, with markets watching for any sustained pricing pressures following the sharp increase in November. Following this, the U.S. Consumer Price Index for December will be released on Wednesday, offering a key update on inflation as the Fed evaluates its monetary policy stance. Markets will watch closely for signs of easing or persistent inflation, which could impact future rate decisions. Notable earnings this week include many major banks such as JP Morgan, Bank of America, Wells Fargo, Morgan Stanley, and Goldman Sachs. Overall, it was a notable week in the markets, with steady economic data, resilient sector performance, and positive earnings trends helping to balance market fluctuations. As we look ahead, key inflation data and corporate earnings will offer valuable insights into economic stability and growth potential. As always, thanks for tuning in to this week's recap, and we'll see you next time.